Cardano's ADA was one of the best performing coins in the 2017 bull run. And then it followed that up with an even better performance in the 2021 bull run. So what I'm wondering is, can ADA pull it off for a third cycle in a row? And more specifically, is it time to buy ADA while prices are low? Well, I don't have an easy answer for you. But what I do have is a ton of arguments both for and against buying ADA, so I'll share with you all my research in this video and then you let me know which side is more convincing, alright? Starting with a case for buying ADA. If you don't remember, Cardano used to be the joke of the crypto world, and critics would often call Cardano a ghost town for barely having any adoption. But that was before they launched smart contracts in 2021. And now, their ecosystem is straight poppin'. Users have had to wait for transactions to go through, which is a testament to the amount of activity in the Cardano network. And they actually had to increase their block size multiple times to better service demand. Also, check out these stats. On-chain transactions have soared 1,700% since January of this year. Average daily transactions for Cardano dApps have increased for the third consecutive quarter. And Cardano is the top layer 1 blockchain in terms of quarterly growth for DeFi total value locked, stablecoin market cap, and DEX volume. Now, these growth metrics are super impressive, but they shouldn't be surprising because Cardano ranks number 3 in terms of developer activity per a sentiment report. So yeah, their ecosystem is far from dead, and they must be thinking, what bear market in Cardano land? But besides a poppin' ecosystem, there's another more fundamental reason to like ADA, and that's their stellar tokenomics. Have you seen this before? It's quite the famous graphic by Masari that shows the initial token distributions of the top layer 1 blockchains. And if you notice, a ton of them have a large slice of pink, which is the percentage allocated to VCs and insiders. But for Cardano, it has a large slice of blue, which is the amount of tokens openly sold to the public. And that means they have very little of their token supply held by insiders, which makes them less prone to manipulation or dumping. But it's not only their initial distribution that's great though. Their current block production is also amazing in terms of how decentralized it is. Check this out. This is how their staking pool groups are distributed in terms of percentage of the overall stake. That large green slice you see, that's single pool operators, which are individuals running their own stake pools. So yeah, that is incredibly decentralized, which means the network is not at risk of a single entity doing things like double spend attacks or changing the rules willy-nilly. Now, something else I really like about ADA's tokenomics is their low token inflation. So their inflation actually depends on several different factors, but just look at its effect on the market cap of ADA to see why it's so great. So from the previous cycle low until now, the price of ADA has gone up roughly 10x. And at the same time, its market cap has gone up 12x, which is pretty close to 10x. That means the price did not have to absorb a large amount of supply increase. And to understand why that's so important, just look at HBAR by Hashgraph. Its price is essentially the same now as it was 4 years ago. Look at its market cap. It's gone up 100x in the same time. So the way HBAR's tokenomics was set up meant that their token holders pretty much made $0 while getting dumped on relentlessly through token inflation. But there's nothing like that you gotta worry about with ADA, so you can buy it without worrying about getting screwed over by its tokenomics. Now, have you heard of the saying, I'm in it for the tech when it comes to crypto? So that has become more of a joke that people say to make themselves feel better during bear markets. But I actually do come from a tech background, so the tech really was what drew me into crypto in the first place. Anyways, all that's to say that my third reason for buying ADA is all the exciting tech upgrades that have been going on lately. First of all, sidechain activity has been heating up in Cardano land after they launched their sidechain toolkit earlier this year. There are some huge sidechains on the horizon like Midnight, World Mobile's sidechain, and Wanchain sidechain. Their toolkit also introduced a shared security model so that Cardano validators can help validate sidechain blocks alongside Cardano blocks. And that'll just increase the overall security of their entire ecosystem. But besides sidechains, they're also working hard on some special programming languages for Cardano, like Marlowe, which aims to simplify the process of creating and deploying smart contracts, and also Akin, which is a new smart contract platform which just launched in alpha phase. So these will hopefully help boost the development activity across Cardano even more, as it makes it easier for builders to build. Now, in terms of scaling, which is a huge focus for Cardano, there's their Hydra upgrade, which is their next big upgrade, and it's also progressing along quite nicely. Some teams are already exploring ways to use Hydra to improve Cardano's DeFi experience. And the hope is that it'll be ready before the next bull run to help bring the throughput of the Cardano network to thousands of transactions per second. Anyways, I had a lot of other tech upgrades that I could have included here, like Mithril, Lace, etc. But I think you get the point about how these upgrades will unlock new possibilities for Cardano, and that's what makes it so bullish for ADA. Now, I bet you're itching to buy some ADA right now, but hold up, because I still need you to consider my case against buying ADA, so you can tell me which one is more convincing. So the first argument here is that there's a lot of legal uncertainty for ADA right now. As part of the SEC's lawsuit against Binance, they called out 12 of their listed coins as being securities, one of them being ADA. They didn't just pick random coins though. They specifically explained in the lawsuit why each of those 12 coins were securities. For ADA, they pointed out how 3 central entities received 16.7% of the initial ADA distribution. And the SEC said that they used those proceeds to build out Cardano according to a public roadmap. They also said that the marketing done by those entities would make investors believe that there's an expectation of profits. So their case is that ADA violates the Howey test and is thus a security. Now, I'm not saying I agree or disagree with the SEC here, but the fact is that ADA went into free fall after that decision. So this legal uncertainty could be a reason to hold off on buying ADA. And at the very least, anyone holding ADA should closely follow the Ripple and Binance cases, as the results will greatly impact the future prospects of ADA. Now, this next reason not to buy ADA is a little bit counterintuitive, but it still worries me a lot. And that's the fact that Cardano's network revenue is quite low. By that, I just mean that the fees paid by users to the network is not that much. If we look at this chart, we see that the total fees generated in USD have been decreasing a lot. And that makes sense, right? Because ADA's price has been dropping too. But the total fees when denominated in ADA has also been decreasing. So that's not good, because lower fees and lower revenues means that the protocol is less economically sustainable. Remember, fees are a big part of how validators make their money when securing the network. So if fees are dropping, then less validators may want to participate. Also, fees are a big part of how the Cardano treasury is funded. So with less fees, they will have less funds to dedicate to development or growth initiatives for their ecosystem. By the way, this isn't just me picking on Cardano. Look at this table. It shows Cardano stacked up against all the other top blockchains. And Cardano has a super low revenue for where it stands. So yeah, just something to consider when it comes to ADA's fundamentals. Now, my next reason to potentially not buy ADA is gonna make some people mad, but I'll try to make the argument as accurately and fairly as I can. So my argument has to do with some of the trade-offs with how Cardano was designed. There's a few of them here, but let's start with the one that is hotly debated, and that's their infamous concurrency issue. Remember, Cardano decided not to go with a typical account model that most other blockchains have. And they instead went with an extended UTXO model, which is more similar to what Bitcoin has. Now that of course has its advantages, but a big disadvantage of the EUTXO model is the concurrency issue that famously reared its head when Cardano's first decentralized exchanges launched. I don't really want to explain what the concurrency issue is, as there are a bunch of great blog posts that already do that, but my point is that all the current solutions and workarounds to this problem are less than ideal. Most of them involve running centralized batchers off-chain, which then post a single transaction on-chain to make sure that there are no conflicts. And while that does work, it also makes it way more centralized, which hurts one of the biggest advantages that Cardano has to offer, aka its decentralization. Now, even if you think that this concurrency issue isn't a real problem, there are other hurdles due to their choice of going with EUTXO, like the issues pointed out in this tweet about how your collateral is not set, or how the minimum ADA requirement is not met. I don't really want to dive into those either, but it's safe to say that they're a headache for users to figure out. And that's a disadvantage because those issues do not exist on other chains. Now, once again, there are solutions to these problems, but they require a lot of coordination and changes on both the protocol and wallet side. And speaking of the protocol side, yes, they will have fixes for those, but remember, Cardano has that slow and steady peer review development style, which means that a lot of the things that the community is waiting for may take several years to play out. Phew! Anyways, this has been a ton of food for thought for you to consider, but let me know your final verdict so I can decide for myself whether or not to buy ADA. Also, if you missed our time to buy video for Ripple, then you gotta watch that right here. Otherwise, Chainlink is up next for this series, so be sure to subscribe to catch that.